And today we're going to be discussing a very important issue, that of the falling rupee. Now, certain economists have said that the Indian rupee may further depreciate to 82 rupees to a dollar in the near term due to widening of trade deficit and the expected aggressive rate hike by the US Fed later this week to tame record high inflation. Last week, the rupee depreciated to a lifetime low of over 80 rupees to a dollar. On Monday, of course, the rupee closed higher. It did marginally better and went back to 79.9. Now, economists are of the opinion that the rupee, after touching a lifetime low, may settle at around 78 to a dollar by March next year, with stability around crude oil prices and likely improvement in geopolitical situation. In this edition of the Discourse, I'd like to discuss the state of the rupee and where it is right now and how much of a concern is it for us and our economy. And to do that, I have with me on the program today Dr. Ajay, Commerce Secretary, Ministry of Commerce and Industry, Government of India, and Vineeta Hariharan, Public Policy Expert. Thank you to both my guests for joining me on this edition of the Discourse. So Dua, let me start the program with you first. How would you look at the state of the rupee as it is right now?
I'm not overtly concerned. One cannot prop up the currency of a country through monetary measures for too long. The real values have to get depicted sometime or the other. Reserve Bank's open market operations had, for a while, showed up the rupee, and we saw a degree of stability despite the two factors which you mentioned, Frank, the geopolitical situation as well as the growing imports. We managed to keep it floating between 75 and 78 rupees for almost 6 months. But what has really triggered the recent decline, and I do share the pessimism about the rupee, that it will probably further decline to 82 rupees to a dollar, is largely because of the actions of the US Fed. If the US Fed continues to increase its rates, in the primary rates, the interest rates in the economy, the leverage which is available to portfolio investors as well as financial investors to invest in the emerging markets, where the returns happen to be higher earlier in the capital market, including the equity market, that is fast disappearing and leading to the flight of capital from the global so-called the capitalists, whether these are the funds or others who have invested in India, as well as the other emerging markets. There has been noticeable flight of capital back to the West, particularly the US, and the recent one, which is predicted that it might become 82 to a dollar instead of just hovering around 80, is because of what you mentioned, that there is likelihood to be 100 basis point increase by Mr. Powell shortly. He had, and I don't kind of blame him for what he is doing. He is looking at how the US economy can face its inflation, the worst in 40 years, through monetary means, because the physical means as of now remain rather limited, with the supply chains get disrupted. First, because of the China effect, and second, now the larger geopolitical happenings, and thirdly, because of Russia not really buckling in to the sanctions and instead using its own resources, including the gas and coal to some extent, and people say as well as food. I'm not sure about it, but to its great advantage. And that is really the cause for what we are seeing today.
Absolutely. Now, building on the points that Dr. Dua has just made, Vineeta, I'd like to come across to you now. See, many of these challenges that are causing the rupee to fall this way are not in our control. And these are all external factors and are based on several of these external factors to which we have no control, and we don't know till when this is going to go on. In such a scenario, what are our options really?
Absolutely. Thank you, Frank, for having me. So just to continue the point where Ajay Duaji left. I mean, just to get the context, setting the context, extending the conversation on the context, the geopolitical realities which we have been facing right from, I think, 2019 when the COVID crisis started. And after that, I think same time around, we had the Afghan crisis. Then we had various other geopolitical issues like the Russia-Ukraine war. The most recent was the Russia-Ukraine war. And so people, I mean, market is always a reflection of the sentiments of people. So in a way, it's an emotional mirror of what people think about the situation around the world. And so they think safe havens are in the West, as Ajay just mentioned. So that's how we're seeing everything veer towards the dollar. Although it doesn't really reflect the strength of the US dollar per se or the strength of that country progressing per se, but it's just the sentiments of people where they think there are safer and more stable markets around the West. So they're seeing it that recently because the European market has also kind of slowed down because of the Russia-Ukraine war, and we've also seen. But when with reference to other currencies, that's another point that we need to take into account. The Japanese yen has really fallen sharply. With reference to all those economies, we're relatively doing much better. If you're talking about globally, how we are fared. So we're not doing so badly. So how it's going to impact us is one, of course, the crude oil prices is another reason why this has happened, the fall in the rupee because of the large imports of crude oil, which is a thing that we've been battling with over the last couple of, I don't know how many years, that about the crude oil, our self-sustainability in terms of crude oil. I think that is something that we really need to be cognizant of, which the government is working on. They're taking slow steps, but I think we need to expedite those steps towards being more self-sustainable in energy, which is going towards renewable energy more and more. Of course, we've crossed the COP commitments and we're doing very well with reference to that, but I think that's the way to go in terms of reducing our dependency on the international crude prices. So that is one. And of course, the second is the theme of the Atmanirbhar Bharat. It's not just a slogan, it's also about being more self-dependent on our own indigenous resources and improving our production of perhaps even crude oil and looking at how we can dig into our reserves for energy and for oil. And thirdly, of course, improving our production of, honing the indigenous resources that we have and scaling up through the MSME value chain. So I think these are three things that we can think in the long term. While in the short term, it's about improving our exports and reducing our imports. So as much as we can to increase the export, I think value chain is very important at the moment. So how we can battle this crisis, although it's not actually a crisis. It's not declared a crisis as yet because cross spectrum people have said that unless it crosses 85, we don't really need to worry so much. So it's about this entire geopolitical imbalance that we're seeing a reflection of.
Right. Absolutely. Talking about options, one option that has already been used by the RBI, several economists are talking about it as well, Mr. Dua. Let me take that up with you. We have a viewer question on similar lines as well, digging into our forex reserves. And, let me play the question too, because it's very similar on similar lines. Jyotishmay is asking this question: is the RBI's constant effort of infusing dollar into the market sustainable? What are its ill effects?
Yeah, would you like me to?
Yes, Mr. Dua.
Right, Frank. I think RBI and monetary policy as a whole can check the fall of the rupee only to a limited extent. It is the afflux of dollar resources from India by the FPI, FIIs is a result of, as was mentioned by Madam Hariharan just now, it is an effect of several issues, interplay of several matters. Certainly, the Fed rates leverage is an important one, but it also is upon the non-elasticity or the less elasticity to price of Indian imports. What we import, our particularly energy, fertilizer, those items we will continue to import irrespective of the prices virtually. The quantities come down only to a very small extent, even when there is a hike in the prices, international prices of these so-called essentials for us. Third, our exports. We might have last year recorded $421 billion of exports, but if you look at CAGR of the last 5 years or 10 years, it is a very, very minuscule CAGR which we've experienced. We had reached a figure of 330 billion exports about 10 years ago. If I remember right, it was 2010-11, so about 11 years ago. From there to have moved to 420 billion, 90 billion increase over 10 years will show you what's, you get an idea of what is the increase in exports from India. And further on, if you look at it under a microscope, a large increase is because of the prices having gone up of commodity prices, hence the export prices. We have to be worried and we have to be concentrated on the volume of exports from India increasing, not merely because of it, and not merely our realizations, which are to a fair extent because of inflation. Finally, I would say the competitiveness of Indian exports as a whole depends upon competitiveness of Indian production, even if it be for domestic production, which is where most of our processed goods, manufacture, etc. go. We have to be worried about those kind of things simultaneously. And import for the sake of import, let's start reviewing that. A must. If the value added by importing diamonds into India, gems and jewelry, gold, is substantial, it is worthwhile. If importing crude and exporting petroleum products, be it refined oil, refined petrol, diesel, or some other products, if we are able to add value to it, it's worth the while, but not merely because of a small amount of value which gets added, and it shores up our exports, and now we are paying for it shores up our imports, and we will be paying for it through our nose at from 75 to 80, 80 to 85. We have to look at the larger impact of it.
Absolutely. Vineeta, Hariharan, coming back to you now, going back to a point that you were making earlier, in your opening remark about the other currencies around the world too. If you look at it, most of the currencies around the world aren't doing too well. If you look at the euro, if you look at any of the other major currencies, they're not doing too well. The dollar, though, is going from strength to strength, and this despite the United States going through a really rough phase, I beg your pardon, as far as its economy is concerned. Inflation is a major concern for the United States. Economic growth is not taking place like they had seen maybe a few years ago during the Trump era. Despite that, the dollar is doing well. What does this say about the global economic situation, one, and what does it say about the dollar?
Yeah, absolutely. So I think our entire globe pegging the currencies against the dollar has been a very, a kind of a traditional ritual that's handed over generations through, and we're still pegging our currency against the dollar. So clearly, I think economists can't go wrong in terms of actually seeing stability in the US dollar at the end of the day. I guess that is the strongest currency that is there in today's world. Because if you see the other countries, they are subject to some kind of geopolitical tension or the other. If you see the, even recently the Russia-Ukraine has actually crumbled that entire region. And then if you see the COVID crisis that actually hit the entire Southeast Asian region, and then the Japan again is going through this syndrome of having the larger the declining youth and old age, the people will, going against the demographic dividend, people above 65 in larger proportion there. And so I think there is this perception that the US is the stable, yet young, yet not too old kind of economy, which has been matured over the years. And so that's why I think the market is pegged against the US dollar. So whatever the, small kind of fluctuations that happen over the regimes, but still I think the USFA is considered the most stable economy today. So various geopolitical tensions, which they are kind of ring fencing country against. So they haven't had, instability for many, many years now. So I think that is a reflection of the strength of that currency. Like I said, the economy actually reflects, everything. It's a microcosm of, everything else. No, it's geopolitical realities of various other things that are happening in the world. So
Absolutely. Absolutely. All right. Time to get closing comments now from both my panelists with the best way forward. What next? Where do we go from here? What's in stake for the rupee, Mr. Dua?
Frank, I am not so pessimistic. Right now, the dollar is getting shored up because of the dollar coming back from the emerging markets, dollar probably coming back from Europe as well as Japan, which has led to their currencies of these nations depreciating, and the US showing up because of the extra dollars flowing back. This is not going to continue to happen. One, the investments in many of the emerging markets are not too large, which can be pulled back. Probably Japan and Europe, the afflux has been there, but the investors would keep their eggs divided. Not everything in the US, but some in the other industrialized world, like EU and Japan, particularly because the option of putting money in China is getting restricted. China as well as Russia, where the West had invested considerably in the past, including in consumer good industry in Europe. So I think there would be some correction automatically, with US actually facing a recession. Yesterday, the Secretary of Treasury, Ms. Yellen, openly said that US faces a threat of recession, which might materialize sooner than we think. Along with that, if it's an inflation, right now it may be so-called stagflation, stagnancy combined with inflation. But soon it's going to be inflation and recession, which probably the US economy, like no other economy, howsoever resilient it might be, can afford to bear it for too long. So that will have somebody else's woes would come to advantage of ours and other emerging markets which are feeling the pinch today. Second, I'm quite sure that with the US market going into a recession, the effect on commodities around the world, prices of commodities would be benign. The prices would start coming down, and that would result in our imports, our import bill coming down heavily, but not necessarily our exports building up, because if the world is in a recession, your exports won't build up, the trade will actually shrink. But those two factors itself, one, US facing not really a doom, but a worse situation than what it is today, and the commodity prices bringing down our import bill would help us to effect a recovery in the prices in the value of Indian.
Absolutely. And Vineeta, Hariharan, close the show for us with your concluding remarks.
Sure. So as I said earlier, I think this entire theme of Atmanirbhar Bharat and looking inwards is not, just protectionism, but it's it's also a reality that we need to live with, and we need to improve our own indigenous resources, the strength of our resources, scale up our MSMEs, and improve our competitiveness of exports, like Duaji just said. And I think we have got a growth story right, because recession after recession, the rupee has kind of braved all recessions, even in the past. And even during the recent pandemic, we've been able to ring fence ourselves and come out, in the V-shaped kind of recovery, and also emerging as one of the large, the fastest growing economies of the world, just recently, just before this inflation story happened. So I think with minor fluctuations, we are getting there, and our growth story is good. And I think India would be a market where the rest of the world would want to invest in. And the day is not far off when we can probably hope to see the other currencies being pegged to the Indian rupee. I at least hope in my time it happens.
I like the optimism, and I really hope that it does. Both the panelists
Yes.
being extremely optimistic on the program today. Thank you, Mr. Dua. Thank you, Vineeta Hariharan, for joining me on the program and sharing views and putting things into perspective for us. Much appreciate you joining me on the program today and sharing your views on this very important subject. Thank you, Mr. Dua, and thank you, Vineeta ji.
Thank you,
Well,
Frank.
Thank you. Thank you, Frank.
Thank you,
Thank you.
Vineeta. It was
Thank you.
nice having a chat with you, Vineeta. We'll catch up.
Thank you.
Thank you,
so
sir.
very much.
Thank you.
Well, what's coming out of this discussion is that the rupee is not in a very bad place. In fact, the panelists are very optimistic about the situation and saying that things will only improve in the near future. These are all issues that have been caused by global extremities and global actions. Geopolitics is at the center of it all, along with the oil issue at hand as a result of the COVID pandemic first, and then the Russia-Ukraine war. The dollar is doing extremely well as compared to the other currencies at the moment, because nations are digging into their forex exchange, and hence the dollars are going back. This situation is not going to last for a very long time, because the US economy itself is not doing too well and is going through one of its worst recessions at the moment, and the situation doesn't look like it's going to improve anytime soon. Well, before I go, let me quickly just share a bit of information with you as well, so that you get to know more about the things that we are doing here. First, I'd like to share My Bharata with you, our sister YouTube channel. Here it is, My Bharata. It's got content related to Indian heritage, Indian culture, Indian history as well. You can see a unique folk dance from coastal Karnataka video on that. There is discussion on coloniality with J. Sai Deepak. There is something about the Ahom kingdom, and we have videos on the other festivals of Bharata as well. So My Bharata is the platform. I'm just going to quickly share the link with you of My Bharata, so that you can subscribe to this channel as well and enjoy the content that we have there. We'll be putting up new content as we go along into the future. That is one. Another bit of information that I wanted to share with you was part of Bharata First Knowledge Center, doing wonderfully well, helping students and aspirants across the country do well in everything that they do. Here is a message from the Knowledge Center. Cracking UPSC CSC is like running a marathon. To get across the line, you need the right guide and training partner. Look no further than Bharata First Knowledge Center, your one-stop destination for all your competitive exams needs. Classes by the best names and subject matter experts in the field. Courses designed to address all aspects of the challenges at hand. Highly affordable courses priced at less than 150 rupees. Register now at kc.bharatafirst.com or download the Bharata First app now. Avail discounts of over 90%. Happy learning. So that is a message from the Knowledge Center. So any one of you can register now and make use of the 26 courses that we have on offer there, all helpful for your UPSC journey, your competitive exams, and also to help you make you a better Bharatiya and a better human being. Go to kc.bharatafirst.com and register right now. You can also download the Bharata First app. Not just that, don't forget to like, subscribe, and share as well, so that more people get to know about Bharata